and it's a fairly decent week to the upside. Suggests that you could have bought pretty much anything and would have been well placed. Very different to the last number of weeks, where it feels like everybody is trying to shuffle portfolios, work out how to create some resilience as well as performance in these portfolios, short, medium and long term. What do you do now on markets after a week like last week?
Well, I think last week was, again, yet another illustration that investors are finding it more and more difficult to price volatility and risk, although I think we are getting relatively comfortable with the fact that this sort of volatility, trade-based volatility, perception-based volatility is going to continue to persist. So I think last week was an illustration that investors have realized that, hey, you know what, maybe it has sold off too much, let me just go back long. I don't buy the premise that last week's rally was driven by a belief that the Trump tariffs would become lighter, because we are just going to hear more and more about it. And I think if you're an investor now, you want to be relatively long cash, be patient, and try to see how this plays out and differentiate.
So what exactly are we waiting for? Because we've still got this countdown around a tariff pause. We don't have any negotiations seemingly happening between President Xi and Trump, maybe in back channels for other officials. So we don't have any progress on these major trade deals. So what signals exactly are we waiting for to give us clarity?
Well, the thing is, the one short-term signal that I would focus on is the fast approaching AI diffusion rules implementation on May 15th. I think has the potential to cause more havoc in the market.
Which is exactly what?
So AI diffusion rules is a Biden-era legislation that has passed actually early January that becomes law on May 15th, which means that for countries and companies in certain countries to have access to critical US AI chips, they will now need to license it. And these licensing will be subject to 3 particular tiers. So if you're in tier 1, it's business as usual, and I think it's just US and 19 or so countries. If you're in tier 2, which is 120 countries, rest of the world, you will have to negotiate a bilateral treaty to have access to licensing critical US chips. And your tier 3 is the naughty boys corner of North Korea and Iran, and you're not going to touch them. Now the issue is, given the kind of negotiation tactics we have witnessed US governments pursue, what is to stop the Trump administration in a week's time to go back to Germany and say, hey Germany, you know that you're in tier 1. Actually, you may not be. So I fully expect markets to try to price in this prospective volatility around AI diffusion rule implementation on May 15th. That's one piece of kind of a short-term target that I will look at.
Okay, let me just do an experiment here. I'm going to say words, and let's see if it comes on the screen. I'm going to say the words S&P 1-month chart. Oh, look at that. They're good today. Now, my point is, yeah, how good's that? You see, it's AI. It's a very hard-working producers behind me. Now, the reason why I mention S&P 1 month is just to come back to what you just said. You said long cash and be patient. Long cash and be patient has already cost you 700 points from the bottom on the S&P as well. I am normally one of the most sceptical people in the room. I think it's fair to say that I worry about most things, and I spend far too much time. In the last week or so, I've had some strenuous debates with all of you, but especially with Karen, about actually I'm concerned that things... No, I'm not concerned. I'm speculating the idea that things actually will just carry on regardless of the politicians, that things aren't as bad, that the US jobs market is holding up incredibly well, that the federal job losses were nowhere near as bad as people thought they might have been in the latest set of data as well, that we're at full employment, that rates are going to come down at some stage, and actually we've seen the worst of the tariff threats as well. For me, that is not a red light. I'm not saying it's a green light, but it's not a red light for owning this market.
So let me elaborate. When I say long cash, I guess what I'm trying to say is I don't think is a time to just go along a certain asset class for good. I think being able to be nimble enough to trade certain volatility cycles is going to be important. I think the days of just passive investing, buying an ETF and going long only, those days are gone. Well, I think this kind of market will...
I hear you, and that is always the clarion call from activists. And I would love that to be the case, because I actually like the idea of smart people making money.